Hello and welcome to this May 18th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Before we go over this chart, I do want to mention to everyone that on Tuesday at 4:30 p.m. Eastern Standard Time, we will be hosting our second in our online trading series. This will focus on trading strategies as far as gaps are concerned. It's learning to trade gaps with precision. If interested, simply go to investedcentral.com and sign up. It is a limited seating event, but register quickly if you would like to learn more about trading gaps. Today's chart of the day, you can see, is UAL Corp, ticker symbol UAUA. This is a $3.4 billion consumer discretionary company. Overall, the chart here actually has been pretty strong to the upside. You can see nice movement back in December. Actually, the stock tripled from $7, actually under $7 back at the beginning of November, was as high as almost 24 in mid-April, so had a very, very nice run in less than 6 months. But since that time, we're seeing some signs of a top here on UAL, and that's got us a little bit concerned. On this move to the upside, you can see in the second week of April, we did put in a higher high, but notice the MACD was much lower. So we were holding on the 20-day on each of these pullbacks, but finally, when we made this move up, the momentum started to slow. We had the negative divergence. That normally sets up for at least a 50-day test, which we did get. As you can see here, point 2 was this breakdown right here beneath the 50-day moving average. And notice the volume had picked up on the selling beneath the 50-day. Now, as we've come back up here over the last week or so, we've made a nice move. We went from the low down around 1640 or so, back over 20, close to 21, but notice we came right up against this price resistance. That prior price support around 20 and a quarter, 2050, now becomes resistance. So we ran from 1640 all the way back up to that 20 and a quarter, 2050 area, failed to get through, and have started to come back down. Now, this move to the upside, what has us a little concerned is the volume on the move back up. This is a classic pattern where you break down on big volume, you come back up on light volume. I think you've got to recognize at this point that the momentum remains with the bears until proven otherwise. Take a look at the MACD right here. See how the MACD essentially broke below the center line and is just simply moving sideways, even though we've had about 4 or 5 days of pretty solid action on UAL over the course of the last week and a half. The MACD is barely budged to the upside. So until we can get some kind of a definitive breakout to the upside, I would be looking at this as a potential short. Any kind of a move back down to around 1780 or so is where you might want to think about taking profits on a short position. You actually have a little bit of gap support also right in here around 1860. So those are the two areas that I'd be looking at to the downside, 1860 and then down around 1780. To the upside, the key resistance area, you've got the 50-day coming in at 2024, the 20-day moving average coming in at 2023. You've got price resistance around the 2050 area, and if you connect the trend line here, you probably come in at around 21. So there's a lot of overhead resistance right in this 20 and a quarter to 2050, even up to maybe 21. Above 21, especially if the volume picks up, we'd be careful on the short side, but otherwise it does look pretty good here on the short side of things. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.